morning, good afternoon, good evening, traders. Alexander, how are you? Thank you for your greeting, Richard. Austin, nice to meet you. Okay, so the yen came off a little bit from where Blake showed a lot of confluence up there. It had a number over 116, but you had this confirmed high here. And Blake said, wait for a pullback. So we've gotten that pullback. Could be deeper to a half, 115.5, where this green moving average is. Hello, Sinatra. How are you? Ryan, how's it going? Alex?
Morning, Dale.
Hugo. Okay, so Ryan, does this bother you on long positions, or did you go to the door on US dollar yen?
No, I've been sitting in this for over a year, so I'm not going to get shaken out by that.
Okay. All right. Longer term objectives. Let me pull up a weekly here, and I know you're not the type to have numbers or anything like that, but gosh, I probably have to look at a monthly to see where that 120. I remember a long time ago people were talking 120, 122. Up here.
For me, it was always about the 114.50, 115 area. That had been the big long top, if you like, going back years. So now we're above that. We should see some further upside. If we fail to hold on to all this in this New Year period and we get below that sort of 114.50, there's every chance we go back in the box. But while it's above this 115, I'm happy. My next big area is, I think, up at 118.60.
Yeah,
it was. I have to check my chart. That's only a double top going back to, I think, 2019, 2020.
Okay. Yeah. So I mean, this looks like that we had a breakout quite some time ago. So you're looking for these highs to be taken out over 123. Eventually,
yeah, that'd be very nice. Obviously, 120 is going to be the big psychological level, but it's it's like we're trading. It's steps. So it's 118.68, which was actually going back to 2015. 2017, 2016.
Okay,
there was a double top high there, which you can see just on your chart there.
Okay.
But for intraday, we're walking in lockstep with yields at the moment. There is only one story, and that's what's happening in yields. I stuck a chart up in the chat room this morning, just showing that significance. Just going hand in hand. If you overlay the dollar yen chart over the 10-year bonds,
Yeah, they're very tightly correlated, and this is something that finally took notice of yields breaking out. It didn't Monday when the move started, but certainly did yesterday. The NASDAQ, all the mega cap growths were pressured. It was like two different markets. NASDAQ doing that. S&P is pulling back, but not even close to 45 to, turn it negative. We did make a new high with divergence in the S&P. So NASDAQ definitely trading to a different drummer. Yeah, right here.
It could just be some early year rotations, when some firms finish off their end of year, they put their profits or whatever, then they set up for the new year. Where they want to put their money. Do they want to take it out the NASDAQ, put it into S&Ps, spread it around, put it into bonds? We get all these jockeying for positions at the start of the year. Everyone placing their bets, if you like, for the year ahead. So it's always a tricky time this first week.
The banks love it. The cyclicals take higher yields as recovery, and people who are saying that NASDAQ stocks, I forgot who I was talking to. I think Adam Budden said that a lot of crypto guys, when they go to cash, they don't go to cash. They buy the mega cap growth as a safe haven trade. And, I pulled up an Amazon chart and I said, I don't know, it must be new school, but I wasn't taught to, avoid risk by buying something that's appreciated 1,000%.
Yeah, buying at
right?
the top. So, not the wisest strategy, is it?
Yeah. So we have the gold up. Gold, looks ugly one day, looks okay the next day. We're going to make another move up here towards 1840 or so. Euro is trying, and cable, is running into a little resistance up here at this 35.5 level. You have upside targets there. I know you like cable.
Yeah, well, again, getting above 135 is a big historical level. If we're looking to build there at the moment, get that, and we can push on up to 136. I think there's some big levels around 137, 137.70. But above 135, you're going to get that. You should get that push up to 138. Maybe if the Bank of England does get a bit more hawkish, we're going to be challenging that big 140 zone again.
Okay, and Aussie, I thought was going to roll over, and it's bouncing back here. I took a shot at it up here today, and risking about 60 here. So commodity currencies acting okay.
Yeah,
so far, but under here we have problems, right, Ryan?
Yeah, definitely. I mean, this is another long termer I'm in, playing against the RBA. They're still sticking to their 2024 rate hike call, which is a load of cobblers. I've been long this, so I started buying it from the 75s.
Yeah, I remember.
Down to 70s. My average is 72.56, so I'm 2 pips off at the moment.
Okay. And I guess the big debate still on OPEC met yesterday, and we're still, at a lower peak in crude. I have a hard time wanting to buy it here, and but hasn't rolled over yet, even with weakness in equities. In fact, that was also part of the strength in the S&Ps yesterday, where a lot of people love the oils going into 2022 as like one of their best trades for 2022.
It's possible, but I mean, do you think that it's been affected a bit by the virus situation? Travel's still in a bit of a slump. We had UK travel agencies moaning about the restrictions and testing. It's put a dampener on travel. That's a big pull for oil.
Is Omicron peaking there, Ryan?
I think so. We just got some figures, record figures, 217,000. But the hospital cases aren't sort of matching the speed at which the cases are rising. If you don't know someone that's got Omicron at the moment, then you don't know anyone.
Yeah.
But, I think the market's starting to look past that because the hospital cases aren't big. We've got France today. Macron, I don't usually agree with a lot of what he says, but he's putting the big squeeze on the unvaccinated. He's saying, if you're not going to get jabbed, we're not going to hang around for you. You're on your own, sort of thing. We're not going to lock down because you lot can't be bothered to get jabbed. So, if that sentiment carries across, then we're going to see a peak in the effect of Omicron on markets and economies and stuff.
Okay, you guys aren't in lockdown, are you?
No, we've not really got anything. I mean, some of the other countries like Wales and Scotland put in tougher restrictions, and we parted on through.
The toughest is China. I talked to Adam Button, and I asked him what he was worried about into 2022, and I asked him if it was the Fed, and he said China lockdowns on the ports. I've seen some things that we're never going back to 2019 and just-in-time inventory systems. China's going to squeeze us, so. I think there's a new order coming, and I think we're going to have to get used to shortages becoming worse, not better, especially if they keep locking down.
I think they've got a bit better at exactly what they lock down. They shut down cities and restrictions over a handful of cases. But some of the bits and pieces I've read that they do keep the core services open. So they need the goods, they need to import food and export as well. So things like that and manufacturing, if you've got a guy sitting in a crane, he doesn't need to be in lockdown. He's sitting in a crane all day, he's not seeing anyone else. You don't get much more isolated than that. And it's the same we've seen with manufacturing over the last year or so. It's recovered stronger from the lockdowns and the virus situation than services have, because, you know, you got 10 guys working in a factory, they're social distanced or well apart from each other. The virus doesn't have the same effect. The only problem with Omicron is the amount of people who get it then have to isolate. You lose that workforce.
Right. Well, you know, as far as food is concerned, China has the biggest stockpile of grains in the world. They own them all. And they also came out with an announcement they're not going to ship fertilizer. And if you look at what happened to the grains yesterday on that announcement, that's something Shy Girl, besides, you know, her work in energy, she's very bullish agricultural stocks right now. And, you know, here's the beans. So, you know, if we're not going to get fertilizer, it's going to be tougher to bring in a crop because that increases the yields. I guess we're, you know, it's going to take time to make an adjustment from depending upon cheap labor and cheap goods, which, you know, aren't going to be there, to maybe bringing all this type of manufacturing back to the US and not depending on China. I think China wants to decouple completely from us, even though it'll cause them pain.
They may do, but it's, you know, like you say, it's everyone's so interwoven these days. You know, the world's such a smaller place. It's hard to decouple. You know, you can't just switch off and say, right, I'm not going to buy from you anymore. And it's just the same as America can't just turn around and say, right, we're going to stop importing from China. We're going to make it all ourselves. You know, they may have a go, but
that's going to take a lot of time. I mean, look how, you know, look how much time.
In this day and age, I think it's impossible.
So I think we're moving from a day of, you know, an era of surpluses to an era of shortages. And if, you know, if you think that we have shortages now, it could get worse, especially if they keep locking down ports. Yeah. So anyway, I just wanted to show the grains and what they did. They're giving back some today, but the beans bottomed under 12, and we're already almost 14. That's a monthly on it.
Yeah. So just a quick one. Yeah, just looking at currencies, you know, a couple of us have been questioning what's going on in the Swissy at the moment, because it is not budging at all. It's not even catching a draft from, you know, the yen crosses going up and the moves we've seen. You know, you can look at either Euro Swiss, Dollar Swiss. It's beginning to smell fishy. You know, we always know that the S&B have potentially got a supporting arm around it, but the Swissy is just not moving anywhere, and it's a bit worrying. You know, when you watch markets as long as we do, it's a bit worrying. It's not picking up off the mat.
Yeah, you know, I had a guest on that was bearish Euro Swiss from much higher. So, and I think Greg put something up here in our Skype about that, we're in just the Swiss that we could be approaching intervention levels.
Well, we were at those levels from 108, 107, 106, 105, 104.
Okay. All right. Yeah. So are they going to do anything this time, or just let it happen?
I really don't know. I mean, they've stopped with the steaming in. I mean, I don't think they've been intervening much at all. You know, even Reuters are picking up on the fact that it seems they've abandoned intervention. But they don't come piling in these days. You know, it's more of a, you know, just sitting there smoothing it, if you will, rather than jumping in, you know, big clumps and big clips of buying. But yeah, you know, it's the fact it's not even moving in line with all the other New Year stuff. End of year stuff is a bit concerning when you're watching price action.
Well, thank you, Ryan. Going to bring your partner in for a bit. K-Man, how are you this morning?
We got ADP in about a minute.
Yes, we have ADP out in less than a minute.
Oh, okay.
But it's fine.
Right. And I'm going to take over the charts as we go into
ahead,
that.
Buddy.
So
you were next. No, Stella's next. Go ahead.
Get in line. There's a queuing system. It's like the port. It's like the port jam.
It's like Woodstock. We're like the Woodstock of FX.
I'm still half long dollar yen of what I had. Looking to reload around 115.5 with a tightish stop. I offloaded some yesterday on the move above 116, but that's basically all I've got besides my long-term silver. So
you also have a nice pie I saw on Skype. Was that your pie that you cooked? For
pie.
King's Day?
Oh, yeah.
Cake or a pie or?
Tomorrow.
Oh, all right.
All right, here we go.
Oh, 807.
Seven,
Wow.
good data.
That
So
is
look at the
big.
dollar yen's popping on that data. I think a lot of people were looking for a miss here. You know, so
number.
if yields start screaming higher, I guess that means the Nasdaq's going to continue to roll over, which it is looking pretty heavy here. What do you guys think about that data that just came out?
Wow,
Look at the
that's-
euro dollar. We had a 2 pips move.
GDP report there, the December service buying jobs were up 6.
Yeah, euro's having a little. I mean, euro's not doing anything. And you know, we had some hawkish comments from the ECB a little bit ago, so you know, I think that's just going to keep the euro kind of sideways. But this dollar yen, you know, really big pivot off the 115.50 level. Well, didn't quite dip to 115.50. We were looking at 115.55, but still, you know, the fact of the matter is, hopefully nobody was chasing it long above 116.25 yesterday, right? That was the point. When you know you see this and you know you're knocking your head up against resistance, you want to be a buyer on dips, and hopefully some of you guys this morning picked it up on a dip. So congratulations if you did. So let's hear what your thoughts are regarding the data, because again, I think a lot of people are fearing that the jobs data is going to start to weaken a little bit, and then you know people are going to have to shift expectations of the Fed. But that doesn't look to be the case. So, you know, K-Man, I know you were about ready to talk when Dale was meeting with you or was asking you a little bit earlier. So, any thoughts here?
No, I'm still same. We all look at the 115.5. I showed a picture on a chart on our chat room. There's a couple of support lines a little lower in the 115.20. So if we ever get a stop run from the weak longs below 115.5, I wouldn't be surprised if we see that, just to clean out maybe a few weak ones. To me, it's the 115, 20, 25, 30 that really should hold in the very short term.
All right. Well,
this data number, even though ADP is always like so how do you call it, subordinate to the NFPs and that report, it should continue to underpin risk in a certain way, right? So I still think it's relatively bearish yen. Let's put it that way.
Report as well, just knowing that.
well, that you know that makes a lot of sense. I mean, you know, and it's bullish risk, and at the same time, it's you know bearish bonds, bullish yields, which should keep some pressure on the downside pressure on the yen. Now, let me ask you this: at what point? Because I think Stelios would probably want to jump in here.
Nope,
At what point?
I'm kidding. Go on.
At what point are people going to be more, you know, looking at this rise in yields as a factor for stocks?
Yeah, I think the you know, earlier I was talking about the previous highs, you know, 177, wherever it was. I really think the big number is probably the big figure, you know, 2%. After that, I think people
right.
are gonna really start worrying. Well, I am anyway. But as I said, you know, as I've said before, this number ADP is not as reliable, let's say, as NFP. I tell you what, if NFPs were this strong, we would have very different reaction. And you're seeing like metals barely moving, and yields again barely moving. So the market's waiting for Friday. I wanted to say one thing about stocks, because we were talking about stocks earlier, and I had a conversation with a couple of friends of mine, and you know, they were saying, oh yeah, but equity indices have to go up, right? Inflation and all that. And I said, yes, of course they do, because the value of the dollar is getting reduced every year. But a chart that I look at, and I think everybody should be looking at now, is the
Let's
S&P.
see it.
I don't have it here, unfortunately. I was looking at it earlier, but it's very simple. It's the S&P dividend yield, and that shows you how, you know, in terms of valuation, you know, dividend yield is a very powerful tool, where we are. And the all-time lows were in 2000, just before the dot-com crash at 1.1% or something like that. The average is something like 4.5%, and we are at 1.2 something.
Oh,
So
we're
we are
almost there.
basically
Bubble
as
territory.
stretched as we were in the dot-com boom. Having said that, that means that we are stretched, but it doesn't mean that we're going to reverse tomorrow. But just something to keep an eye out on. And my friends were saying they're not traders, but they like to dabble in the market and say, what do you do? Where do you invest? I said, well, bonds are out of the question, because you buy bonds. What do you get? To get any kind of decent yield after tax and commissions, you have to take stupid risk. And
Right.
I'm not touching bonds. And equities, you look at this, you look at dividend yield, and it tells you that they're very overvalued. So what do you do? So they pile into cryptos.
Right. Well, I mean, if that's where they think they're going to get the bang for the buck, right? So, hey, thanks, Delius, for your thoughts. Ryan, do you have any thoughts on this ADP number?
Yeah, it's a good solid number. Any way you cut it, a number that high, 807, it's going to keep things afloat. But as we said yesterday, unless we get some bad numbers, everything's good. But that's probably going to get people revising up Friday's number a bit. Which reminds me, I need to get the NFP competition up and running now. That's probably going to be shifting some of the targets from people as well.
Yeah, that's right. So, that's pretty exciting. Somebody gets to win a free month of jumping in the ForexAnalytix community. So that's good. By the way, just, if you guys want to know, this is what the ForexAnalytix community looks like. I'll just give you a quick example of, this is, you can see, I'll just show you, this is where I got up, somewhere around here, somewhere around, this is about.
I need a Dramamine though.
Well, actually, I have to go even further than that. This is Good Morning, and that was an hour and 20 minutes ago. So you can, that's when I first jumped in the chat room. You can see how much talking happens just this in the general chat room, and that's just the general chat room. That's not including the the Forex Flow live room, the trades room, where we're picking trades off out of the market, news and research, the Spanish chat room. So we got a lot of it's a very active community. So one of you guys or gals are going to be able to win that with Ryan. So make sure you're following Ryan on a Forex Flow Live so you can jump inside of our community and get a free month, hopefully.
And ForexAnalytix, of course, because we put most of our stuff out on that Twitter handle now.
Yeah. So there's a lot of our information that comes out here, and it's not, you guys, it's specifically for ForexAnalytix subscribers in our news flow. So, but Ryan, make sure you get on that because we're only a couple of days away. So, hey, let me ask your opinions here. You guys have been up, obviously all of you, but Dale and I, we're kind of straggling, as North Americans, we're just coming in. What are the big developments that have happened overnight that you've seen? I mean, we had some comments that came from the ECB. Should we believe them? I mean, they're talking about rate hikes, and I was like, what? Really? What do you guys think?
Well,
here?
This guy Kazakh, he's a known hawk. He's similarly like the Bullard of the Fed,
or the Stelios of gold.
Yeah, so he's been bullish. He wanted to stop QE last year, wind it all down, go to hike. So it's no real surprise the comments out of him. But as K-Man's noted, it's when the tone changes from some of the lesser hawks or even the doves. When they start changing the tide, that's when we start to take note. And I think it's coming very slowly. It's coming. They can no longer afford to ignore inflation than anyone else. But there was an interesting piece out in the FT earlier, looking at the ECB and, the fact that they've got there's two sides to it. You've got all the southern nations heavily indebted. You start slinging up rates, they get crunched. And all their borrowings. And then on the other side, you've got Germany, who's only got, I think it was debt to GDP of 69% or something. While countries like Greece, 200%, Spain 180%, and so they were making a case that you've got inflation that's higher than it's been for years. And last time this happened, rates were much higher. You know, Fed funds rate was around 8% last time inflation was this high. But now it's all set much lower, and the ECB's problem is how they assess all that against all the different countries that they've got to manage.
You know, it's quite a challenge. You know, you take the United States, and you know, a lot of people take for granted that we are the United States of America. But hell, if you segregated it between, like, you know, California was one country and Texas was another country, and you take like the state of Arizona that I'm in, you know, we'd be like, you know, we'd be Greece, or not really, but, you know, yeah, actually probably, you know, we'd be something, you know, in between. But, you know, take a you know, different parts of our nation would be, you know, like different parts of Europe. But we can all, you know, as one nation, follow one monetary policy, and, you know, everybody's pulling in one direction overall. And it's hard when you've got, you know, sovereign nations in Europe trying to come together. And, you know, then at some point, you know, if you're Germany, or if you're, you know, France, or whatever country that may be doing better at that time, like, well, do I really want to chip in towards helping out every other European country? It's tough. I mean, it's a tough game that ECB has over there.
I think with the precedent that central banks have made now, I don't see why they couldn't tighten, obviously not in a major way, but help out countries like, you know, Greece needs to issue another bond, whatever, and the ECB buys most of it. You know, they can do whatever they want, you know, and they can artificially try and keep rates low, because you know it, that if you let bond markets find their own stability level, I mean, Greek debt would be a lot higher in yield than it is here. But you know, they have the flexibility, and now with that, they've been doing it for so long, they can do anything they want. So, you know, they can try all sorts of things. But I agree, you know, there's a clear divide between Northern and Southern Europe in terms of how things work and how indebted they are. And it's very, very difficult to have a single currency and single monetary policy across all these countries. And I think it was a fundamental flaw when they started this whole project, but they chose to ignore it. I don't know.
And it's situations like this that show how bad the system is, I think.
Right. Yes. Right. Well, yeah, and that's the thing. So I'm, you know, now we don't have to get in the conversation today. Is the euro actually more of a project, or, you know, is it around for good? But because that's a very long conversation, and we only have a few more minutes before Dale brings on his guest. But let's turn our attention over here to gold and the precious metals. It looks like Dale's guest is more of a crypto person, so we don't have to dip into Bitcoin and Ethereum or any other cryptos at this moment. But let's look at gold. Gold's got a little bit of a bid here. It's going to be more difficult for the dollar to gain strength when you have gold that's firming up like it is, and you got silver, you know, which looks, in my opinion, you know, it has been acting a little bit better than gold. Whoops, I didn't mean to do that. It's been acting a little bit better than gold, but, you know, gold and silver both look like they're firming up here post ADP data. There's silver, here's gold. And what are your thoughts here? You guys have any thoughts on? No, I shouldn't ask Stelios. He's always bullish.
Well, you know what? I'm not at the moment. You know, I still think
let's hear it.
They haven't convinced me. I think they're going a lot higher eventually, but they haven't convinced me yet with this price action. And we need to see how they react as the Fed starts unwinding, starts tapering completely. And it's the next two and a half months. So, but for now, I don't see any breakout. I don't see any technical development that's going to change my mind for the short term. For the medium term, you know my view.
Well, you know, we got, like I said, we have, you know, silver and gold, they're picking up right now, at least intraday. One of the other things that I also noticed, and this is, you know, I don't want to get into too deep of a conversation here, but, you know, we were looking for a reversal in crude, you know, as we you know, developed this Gartley pattern right at the holidays here, you know, and crude's really just backed up into some pretty, in my opinion, some pretty key resistance. This is a previous channel we've been following for basically a year. We're, you know, nudged up the underside of that previous channel. We hit it here. We're basically on it right now. And remember, trend lines are not perfect, and they're, so you can adjust this slightly just to say, okay, we're pretty much there. We're basically just nudging up against that trend line, moving up towards $78. This is some pretty good resistance here, but if we break out and you see, gold and silver break higher, I mean, hell, you even got copper. It looks a little bit better today. We could see another run higher in some of these commodities. So just keep that in mind, because that could have a bit of an effect on what's happening in the rest of the especially in the currency market. But guys, any final thoughts before we go and let Dale take over with his interview?
Not really, no.
There's your answer.
Bueller, and no, that's
We've
it.
said it all.
We said it all. That was it. All right, hey guys, make sure you guys take advantage of the $1 trial for ForexAnalytix, so you can join our community, get involved with the trial, because we have a special pricing that's going on this weekend that happens once a year. When that happens, you do not or will not get the trial, so you might as well take the trial today. So get in today, and then you'll get the better pricing as it's released this weekend. So, Dale, thank you very much. Stelios, K-Man, Ryan, and that's it.
Thank you,
Thank you,
team.
guys.
Everybody.
Have a
All
great
right,
day.
nice work, everyone. All right, so here we go. Cheds, welcome to F.A.C.E. I'm really looking forward to meeting you and having a conversation.
Good morning.
Good morning, Cheds. It's a pleasure to meet you. Appreciate
Oh.
you taking time to be with us today.
Oh, it's my pleasure. It was nice of you to reach out. So I want to say thank you for that.
All right, well, do you want to share your screen, or are you going to be showing any charts when we
I can
talk
do that.
more?
Yeah, whatever.
Okay.
Sure.
Should we go with should we be brave and go with cameras?
Yeah, I'm okay with that. I can do a
All
camera.
right. Okay, we'll go with cameras too. So here you go. It's nice to meet you. I've been to your YouTube channel, and I know a little bit about you. Besides a trader, you're an author. You've written a couple of books, and you were the original analyst on Bitcoin Live. And what I'm interested in, and our audience, is the journey that traders take to get from point A to point B. And I was wondering if you could jump into a time machine and take us back to perhaps your first gig in the industry.
Absolutely. Well, once again, I definitely want to say thank you for having me here. And if you do hit that start video, I can, allow me to start the video. I can definitely join the party.
Okay, I don't. Blake or anyone. I don't know my Ched's video. Let me see here. Mute, allow, put on hold. Oh, I don't know. I tell you what.
No problem.
I'll take my
Yeah.
mug off. All right, and we'll just talk charts here. All right.
All right.
There
All
we go.
right. So yeah. So once again, thank you. I've been trading for probably about 15 years, and for most of that, I was kind of chasing my tail. And in the early part of my journey, I didn't really have a plan. It was a lot of the buying the pump and selling the dump. It was reactive trading.
Yeah.
And through different markets, I actually started trading legacy markets. Because it was like, oh, I want to trade Apple. I want to be a big boy stock trader. So I started trading the real markets, but I did horribly at that point. And then I shifted over to the OTC penny stock market in like 12 and 13. And then there was the big marijuana stock boom back in 2014. And there was unbelievable liquidity in that space. And so I had some success and actually had some huge winners. But the reason I had those huge winners is I didn't know any better. And I just held on to stuff, and I didn't know how to take profit. And I had these huge winners. And then those huge winners turned into huge losers. So I wrote some trades, all the way up, all the way down. I got some great experience.
Yeah.
And it was frustrating.
A great hold is really the toughest thing for me too, Chad. Long-term hold, it's great to call a move, better to trade it, but the toughest part is the hold, because you say, well, I could get out here and recommit on a pullback or sell the next rally, and you turn your head and then it's gone. What's your self-talk to stay in a trade? Someone once told me,
Yeah.
and I think about it once in a while. They go, Dale, well, if you are not willing to reverse that position, walk away.
So, the way I approach it, I think about a thesis. And, when you enter the trade, you need to have a well-defined thesis because that allows you to exit the trade with minimal loss. So your thesis is your reason you're entering the trade. The price is holding this moving average. So, maybe I'm more of a swing trader and I'm entering a trade because the price is above the 200 moving average and it keeps bouncing off of it. So, I enter there, and as long as that's holding, I can, in theory, hold on to the trade. Profit taking, there's a lot of strategies. You can use a trailing stop loss where you move it up and you lock in a certain amount of gains. I'm kind of risk.
Do you take partial profits?
Absolutely. I do take partial profit. And if I'm doing, I often have multiple positions as well, kind of in the same play, which allows me to kind of stagger those stop losses at varying levels. So I always kind of keep a little bit of a piece. Rather than kind of doing the whole thing. So, that goes into the concept of kind of scaling in and scaling out of your position, being more adaptive and more agile as you do that. But I'm risky first. I don't like the whole. Yeah, go ahead.
I was just curious, because I asked this question and I'm curious what your answer would be. How many years did it take you to make breakthroughs and become more consistent, not necessarily, becoming rich, but, having confidence in your trading to know that you could pull enough money out of the market to live on it?
At least 10 years for me. But I can tell you it would have been a lot sooner if I had started reading textbooks earlier in my career. And it really wasn't until I started to study classical charting. And then I went ahead and I did, especially CMT. I passed the CMT level 1. I'm studying for level 2. And that just allowed me to really understand trends and to I realized I was playing against the trend. I kept trying to guess a bottom, and I kept trying to short the first shooting star candle on a strong uptrend. I kept kind of stubbing my toe. So it took me many years, and it really wasn't until, like I said, I started to study textbooks and to understand trends, understand momentum, and defining my risk. So it took me a long time.
The only thing we could control, risk.
That's it. The only thing you can control. And like controlling yourself is really hard too. I mean, you can be great at identifying chart patterns, but if you can't identify your own emotions, your own feeling, like one thing I talk about is if you enter a position and you immediately feel uncomfortable, then you probably have too much money in that play. Right. Yeah. So it's being mindful of yourself and your own kind of your emotional needs and your own risk threshold.
Is that in your book, the 50 lessons?
Yeah, that's in the lesson on emotional mindfulness. And a lot of these lessons just came from like things I realized about my own trading and all these mistakes I kept making. Even stuff I was doing like self-punishing. I'd be in a trade and I'd know like it was a bad trade, but I held on hoping I would take a loss so I could hope that I would learn the lesson, like trying to punish myself so I wouldn't, doing all these weird emotional tricks with myself. So it's, these are all mistakes I made. And, the book is trying to, help other people avoid having to go through everything I went through to get to where I am today.
That's a great mission, to help people avoid the landmines you've stepped on, although most of them will have to step on them themselves for it really to, mean something to them. You could read things, but going through things, living through things is what makes it more indelible, doesn't it?
Yeah, 100% right. It's 100% right. When you can personalize it and look to it, with your own experience, that's when then the lesson really starts to stick.
Since you're a writer, were you journaling?
I do journal. You
still do? Okay.
I still do journal because I'm still making so many big mistakes, and I'm trying to push myself to learn new markets. And you never really, hopefully, you really never stop learning. So I do still journal. Absolutely.
Okay, so why don't we talk a little bit about crypto? It almost looks like a head and shoulders top to me, but you've identified this range that we're in, the
Yeah.
this kind of rectangle here.
Sure.
If we break down here, what are the implications back to the lower band, or are those bully bands that you use?
So we're at a really interesting pivot point right now
Yeah.
because, and one thing I always like to say is a true chart technician can articulate both the bullish and the bearish thesis, right? No blind
Great.
spots.
That's a pearl.
And so what I see right now is I can draw you a weekly chart with an ascending triangle with a pretty clear horizontal resistance, with that up thrust in November. And then I can draw the rising demand or the rising hypotenuse. I give you an ascending triangle with a measured move to 100K.
Yeah, that's right.
I can also give you a head and shoulders top developing with a trigger level with like, right around maybe 42, 43K. And I can give you a measured move down to the weekly 200 moving average at 19,000. So it kind of rests on this key moving average for me in the weekly chart, the 50 period simple moving average. And if you look at the move, and ever since it accelerated on that 14,000 break, back at late 2020, it's held it. And we tested in May, we tested it in June, we tested in July, we tested the area in September. We're testing it right now, and we're really in danger of losing it.
Yes.
Your job as a technician is to identify the trend and then ride the trend as long as it's profitable. And while you're doing that, you're looking for signs of weakening. So, we have some signs of trend weakening, but oftentimes the best entries will come kind of when that trend is most threatened. So, it's such a critical point right now.
Let me ask you this. It is such a critical level right here. And I'm curious, because of the growth of the crypto industry and everything, if this could, everyone's trying to identify it as Bitcoin an inflation hedge? Is it a risk off hedge? Is it what kind of hedge? Is it possible that if Bitcoin breaks down here, that it's going to have impact on the legacy markets?
I like to know my strengths and weaknesses, and it's one of those things where I'm like probably the wrong guy to ask that question to.
Okay, probably anyone would try and answer that question. So you should try. Indeed. But I like to hear the ice crack. So I think about these things, and if this happens, what's a correlated effect in different markets? So I was just thinking that maybe if Bitcoin, which is a sign of a new age and rampant speculation in altcoins and NFTs, and Melania's putting out an NFT, and all of these things that are getting all this hype. Matt Damon's making commercials, and Tom Brady, if he didn't trade crypto, would be broke. So he's trading crypto. So it makes me think that it might be set up for a cleansing because of all the hype. And I'm wondering if that would spill over into legacy markets in some way as to risk off. Some people try and say that one of the reasons gold hasn't performed is because the new generations, the millennials, they go, well, why would you want to rock? Why would you could? This is more portable, and the government and all their rationales for it. Do you believe that crypto siphoned off money flow from precious metals, and that's why up until recently they haven't been performing?
Yeah, I feel like that's pretty well agreed upon. And I believe we saw there's a chart that came out in the last day or two. I saw like JC Peretz from All Star Charts tweeted it out. And the idea of like the store of value market. And for someone like me who's not a great fundamental analyst, I try to be really good at what I do, a technical analyst. I do at least understand that you can argue that Bitcoin is a store of value, a digital store of value. It's a hedge against inflation. That's maybe the full extent of what I know, but I guess it's got 20% of the quote unquote store of value market. So it does make sense. I definitely would, and there's the idea of risk on and risk off, and definitely, people are using Bitcoin as a hedge, and I think it's true that it's taking away a little bit of the limelight from gold, no doubt. And that's why Peter Schiff's jumping in there, and he's trying to straddle the line and kind of, pretending to hate Bitcoin, but he wants the interactions from people on Twitter who are into Bitcoin, and he wants to still kind of be involved in the conversation. So I think they kind of go hand in glove right now.
Yeah. Peter's kind of been one note musician. I just I want to know what you think about a lot of people are now using crypto to have yields on their investment by staking new deals. A good friend of mine, Scott, was telling me about that builds the long-term case for it really becoming an important instrument, because if some of these startups work, it's kind of like how the pink sheets and bulletin board stocks used to be, only crypto, right?
Yeah, absolutely. I have a friend who's involved in really the early stage financing. And, it's like one of those things where they invest in 30 of them. And the idea is that one or two really take off. And it will
I heard
pay for
there's
everything.
yields involved in it too. You also get paid like about 7%.
Yeah, some of these have the yields. Yeah,
Yeah.
absolutely. And I was having a debate with some people, I interact with people through Twitter. And, people ask me about a chart and I say, oh, this one looks, doesn't look so good. Why are you in it? And they say, well, I have a yield. And I say, okay, well, I get that, because I have my own dividend portfolio. And, of course, I try to time my entries. I'm looking to buy dips in kind of, uptrends. I'm not just I'm not just trying to buy the top, but the yields definitely help people to hold. And so it's almost like a mechanism within the industry itself, which helps. It's a self-preservation mechanism. It's an incentive for people to hold and to kind of keep it all going. So it's a good thing.
7% in a yield-starved environment is pretty good. Although I've been taught the higher the yield, the higher the risk. That's why you get the high yield.
That's why you get the high yield.
It is to get you there,
right?
To hang in there. Okay, so are you going to? What's going to be a trigger for you out of this formation? Do you need a close or two? Intraday. I know in your experience you've seen so many false breakouts and breakdowns that turn out to be good trades if you have the head to reverse. But tell us tactically how you're going to handle this Bitcoin chart, and if you have to go even shorter term, that's fine.
Sure. So, I mean, the idea of confirmation is an interesting topic because they're, in classical charting, there's a lot of ways to do it. You can do one close.
That's something else I wanted to ask you. Was most of your influence in CMT, or were there other authors that kind of helped you make breakthroughs? Like, my Bible was Edwards and McGee, Technical Analysis of Stock Trends. I mean, you're going back, centuries. I'm kidding.
You're right.
Decades.
No, you're not that far off. I mean, I started, for centuries. I started out with Nissen and candlestick analysis, which is, rice futures from the 1800s or whatever. And I started with that. And then I went to Schaubacher and, the quote unquote Bible or whatever of technical analysis. And that, reading those two, I was really got me going. It just opened my eyes and really made me want to kind of learn more and practice more. So it was Nissen and Schaubacher really got me started.
Okay. Yeah, Schaubacher is interesting because he takes a different side on head and shoulders formations. They can be continuation formations. I was taught that they're reversal formations, but I've seen them work. I've seen them work as continuation formations as well.
It's interesting. I think there's sometimes too much focus on naming a pattern and rather than just price relation to key horizontal support and resistance, because really that's all that matters.
Keep it simple.
You keep it simple. And that kind of leads me back to answering your question from a moment ago about how I'm dealing with the Bitcoin range. And I think we have to look at clear levels, and you think about momentum and, the broader trend, it's a primary bull trend on Bitcoin. And we're clearly in a secondary corrective phase right now. And the question is kind of when that, either will continue or reverse. And one of the things you want to do is listen to the price, and you want to kind of look at the most obvious clues. You don't want to mess around trying to get too complicated. You want to look for the most clearly defined levels and use those levels to structure your risk. And, right now you've got a very clearly defined top of this range, right around 52K, and the bottom of the range, right around 46,000. And,
Okay.
For me, if I want to be a bull, I want confirmation. So to be a bull, I need to be above 52, but I'm thinking more, 53, 53.5. We had an attempted head and shoulders reversal that failed November 18th through December 3rd. And you had the invalidation on that right shoulder break right around, 55.5, but the head there was 53.5. So I take the head right around 53.5. That's the bottom of the consolidation cluster from August. That's near the top of the macro lower high from September. It's a big zone, really 52 to 53.5. I want to clear that zone, right? I want to clear that zone. I'm above the MA50 in the daily. That would let me feel like I can be comfortable to get some risk, to kind of really, would suggest to me bulls are kind of, picking things back up.
Okay.
Downside, if I see a clear break of 40, this 46K zone, I'm looking right around 40 to 42K, because that's been a really big level in the daily chart. The highs of January, lows of February, and the highs of the 80-day rectangle from May, June, July. So I'm looking at these key horizontal levels. I'm not drawing diagonals and trying to base my trade on a diagonal throwback or something like that. I'm really trying to focus on clear horizontal levels. And I'm gonna let that guide me. One thing I would look for, though, if I wanted to go long, is I would look for a spring, what's called a spring, right? A false bear break, where you have a really well-established horizontal support level, which is broken and then recaptured. And that would be
doesn't close under it. Yeah.
Doesn't close under it, and it's recaptured. That would be a great entry potentially. So a really quick sweep to like 42K and then boom, back up above 46K. Now we're talking about something. So maybe I'd look for that.
Okay. That's pretty interesting. We were having a discussion about crypto being still embryonic, because you could go back to 2000 and Amazon peaked at $80 and went down to $2, and then went to 4,000. So, we were drawing comparisons that, maybe Bitcoin is like Netscape, which was replaced by Google. Are you on the lookout for up and coming stars in crypto that may replace the old guard that got the whole game rolling?
I leave that to others, my friend. I'm just price. I'm price.
Yeah, you're all right.
And I mean, I'm terrible with fundamentals, but I do understand the scarcity of Bitcoin. So I know that's kind of what it has going for it, the first to market, all that good stuff. But I'm so bad at fundamentals. I believe everything will flow through price. If what you're telling me is important, I'll see it in the chart, because I'll see that price relationship with support and resistance and momentum. So, and I tell people, and when I teach, I tell people, listen, you may have a better way, but I'm going to tell you what I know and what works for me. And hopefully that will help you kind of with your method. So,
well, if you're a price action trader, why have you chosen Bitcoin to trade? And is it only Bitcoin? Go ahead.
Oh, no. I trade anything with volume. And I do a lot of, on Twitter, I try to cover anything that's topical, anything that has action, because I'm trying to help out other people, and it helps me. It's symbiotic. I'm trying to grow my account. I hold Bitcoin, I hold Ethereum, and then maybe for about 5% of my crypto portfolio, I'll trade. Right.
I see.
And I'll trade whatever's hot. Luna right now, AVAX, Sol recently, just anything that's an uptrend. I'm looking for an uptrend, and I'm looking to buy a dip in an uptrend, a clean throwback. I'm looking for something like that. I'm looking to short kind of a weak altcoin that just had a bounce, something like that. So anything with volume is what I'm looking for. Anything, it's like if I'm going out to the club with my friend. I'm looking to meet a lady. I want to find the club with the most people, so I have the best chance. So I'm looking for volume and liquidity.
Okay. And if you get rejected by that lady, how do they treat your stops?
Well,
go ahead, say you don't trade with stops.
Oh, I definitely trade with stop. My stop is my thesis. When my thesis fails, I'm out.
But not a hard stop. It's in your head where your thesis fails, right?
No, it's clear. I try to structure my trade based on a clearly defined horizontal level most of the time, because I'm not a good trader. So I'm trying to make it easy on myself. I want to give myself a clearly identified fail point because I'm trying to live for the next trade, right? I'm trying to get my trade into profit as soon as possible. I'm trying to move my stop loss into profit as soon as possible. I want to get rid of my stress. I want to get back to playing basketball and gardening rather than watching, the 5-minute chart because I have some money in it.
All right. I want to learn from you right here. And you bring up you try and eliminate stress.
Yeah.
My oncologist, when I was going through colorectal cancer 6 years ago, told me to de-stress. Yeah. And I said, well, I'm a trader. That's my livelihood. I don't know how I'm going to accomplish de-stressing. How do you de-stress, Jeds? I mean, how do you deal with this? Is one of the most stressful things you could choose to do, I think, in the world. There's probably others, but this is especially since it went 24/6. It wasn't as stressful in the old days before all these new instruments came on board, and FX is 24/6, where I could know the market's closed. Right. And I didn't have to think about anything happening till the next morning. So what's your self-talk for de-stressing? Do you ever just get flat and walk away for a while? Stop trading for a while?
Absolutely. Okay. And I'm a fellow cancer survivor too. So I want to say
I saw that.
Respect to you for that. I define my risk if possible. That's kind of the central point. I define my risk. You can't eliminate stress, but I try to do it. So I walk away. If things aren't work, I really am good at trying to monitor myself. And if I feel myself being negative, I know that my trade's not going to work out. I feel myself being negative. I know the trade's not going to work out. So I walk away and I just go play video games, or I'll go shoot basketball, or I'll go do something else.
Can you dunk? Can you still get over the rim?
Oh, no. Forget about it. No.
Someone just commented on my thing about de-stressing. He said, I think your surgeon would argue he has more stress than you, coach.
Yeah. Tell me about it.
I'm sure. Right? With us, it's just money. With them, it's life and death all the time. So,
I try to be thankful. I try to practice it, or try to be appreciate. I try to appreciate kind of what I have and the opportunities I have in life. So I try to put things in perspective. After fighting cancer, like I don't take anything for granted anymore. And every day is a gift. So I try to put that all in perspective, and that's helped me. I've been really lucky in life, so that helps me kind of deal with the stress too. I have good friends, good family, and all that. So everybody's different, Some people it's harder for other people to deal with stress because maybe they haven't been as lucky as I have, perhaps.
Well, I think everyone could find something to be grateful for. If you're just walking around, I was at a doctor once, and some lady I said hello to, and I said, "How are you?" And she said, any day staring down at the grass is a good day. So
absolutely.
Yeah. And my tagline is, don't just count your pips, count your blessings. And I think everyone can find something to be grateful for. And I'm grateful that you granted us an interview and came to, share your views and your experience as a trader with us. And why don't you show our audience your books or your YouTube channel, or where they could find you and follow you? That would be fine right now.
Awesome. Do you have that up, or what's the? What do we need to do,
I do. So I'll take the screen.
Okay.
Yeah, and so here. Okay, so I have. Move this. Here's Chad's YouTube channel. And
there you go.
And here's his book, Trading Wisdom. It's an Amazon #1 bestseller. Congratulations.
Thank you, my friend.
And then really I'd like to his battles with cancer that made trading kind of a walk in the park. Getting stopped out in the market is better than getting stopped out in the hospital. So
so true.
I really appreciate getting to meet you. And encourage people to learn from others. You know, I say this about experience. You can't learn it. You have to live it and go through things, but you can learn from the experienced. And I appreciate you being here, and I learned from you today. So Cheds, you made it through an interview with Dale Pinkert. You're now my trading warrior brother.
My man, I really appreciate that. It was very kind of you to reach out. So thank you for that.
We'll do it again, and good luck on whichever way Bitcoin resolves itself. You know, I kind of think that I'm leaning towards some type of capitulation cleanse towards 20 and then back up the truck. So
yeah,
we'll see what happens.
Either way, we'll try to have fun.
Tincture of time.
Yes, brother. Thank you so much. I wish you all the best going forward.
Thank you so much, Cheds. Everyone, that's going to be a wrap. Thank you for your attention. You know where to catch Cheds. There he is. Looks like he has a nice little setup there in his office. And as I said before, don't just count your pips, count your blessings. And you could join the team in 15 minutes for the morning edge. And we'll see you tomorrow. Adios, and thank you again, Ched. People enjoyed it.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.